saying this. I'm adamantly against rainy day funds.
What you just said is one of the most insanely idiotic things I have ever heard.
So, you want to have that rainy day fund. My suggestion is credit card.
Everybody knows you never go full retard. What do you mean?
And let's say, God forbid, it's a medical emergency and you have to declare bankruptcy at some point in the future. Declare bankruptcy, it's bankruptcy, it's bankruptcy, it's...
Why is everyone so fucking stupid? Why aren't more people intelligent? Like me.
Like me.
Like me.
Like me.
Be sure you like, comment, and subscribe.
Oh, God. I love this, man. There's so much content.
He's the gift that keeps on giving.
I mean,
bad finance.
You block me and it gets personal real quick. You can't take the heat. Maybe I have something to do with it because I was blasting him on one of his live streams, and now he doesn't post his live streams after he does them.
Yeah, I mean, but
he hides
he deserves it.
Freaking trash.
Yeah, like as arrogant as he comes off and is, and the dumbest way that he shorted Nvidia or QQQ in the past or the S&P in the past, like,
and then people, when you call them out, and they'll be like, "Well," and you always get the perma bears come out with, "Well, actually, he's right. The market's overvalued." Ugh. These people kill me.
I don't get it.
They're waiting for something that has happened twice in my life, like literally.
Yeah, like
.com burst and Great Recession.
Yeah.
So in 20 years of investing, 2 events. They think every year there's going to fucking be one of these events. It's unbelievable.
Oh yeah,
and all you do is just lose out on compounding in the markets because you're just scared and you just sit in cash all the time. And then they're probably like, "Oh, it's all going to crash still, but I wish I was in the market the last few days or last month." You can't have it both ways.
No.
Either you're clownish. If you want to be a perma bear, put your money in treasuries and CODs and shut the F up. Like, I'm so sick of these people. I don't get it. Or they're pumping a product like, the gold ETFs.
Oh yeah.
A lot of them pump gold. Of course you're a perma bear if your business is to sell like some sort of gold ETF. I mean, it's what you do for a living. Or you sell books on it or prepper food, it's like a lifestyle to convince these people that everything's going to shit. But like, you got bigger things to worry about if the whole market goes down. And
oh yeah.
Like, and I did a video once where it was like the worst thing possible is like watching those old videos of people after 2008.
Mm-hmm.
There's videos on YouTube where like 60 Minutes did a bunch of specials, and so did Frontline. I encourage everyone here, go watch. Frontline is free. Their YouTube channel is free. Go watch every documentary they have on 2008. And also the monetary crisis of that happened, and then COVID. They've done great documentaries on it. It's all free on their YouTube channel. But they'll have interviews with people that had no idea what was in their 401k. They thought it just went up every year. They open their brokerage account or statement because they'd never opened it before, and then it's like 30, 40% down. A lot of them sold. And you've destroyed your financial future. And people like Paul like feed that, and people like Meet Kevin feed this. Like, it drives me nuts.
Yeah.
So
It's everywhere for sure.
No matter how many charts we show you that the market goes up over long periods of time. So he says that in his videos, but then he also shorting things. Like,
yeah,
you recognize the futility of what you're doing, but you're doing it anyways. Like,
yeah, you say you're long term and you care about compounding periods, but you choose to shorten the dumbest and dangerous ways possible. Like,
so what I think happened. So I've done enough looking at Paul's videos from like 2020, and we'll see in a minute. He's not the same type of investor he is now then. So what I think happened was what happened to Gabe. GS whatever analytics bullshit.
Oh yeah.
The dude that wanted to fight me. So for people, I'm not going to get in all of it, but what I think happened is Paul got into this whole selling puts or cover or naked calls, and that worked beautifully when the market went up forever for what, a year and a half, right?
Yep.
From March 2020 to November 2021, give or take. That strategy was phenomenal because you just collected premium. You probably never got called on any of it. And I think Paul did that too. And now he thinks he's a genius because of the short period of time that strategy was perfection.
Mhm.
Then they don't change. They don't recognize that that's only short term. You can't
Nope.
that your strategy is not being. You haven't unlocked the market. Like you haven't solved the riddle. Like you just were in the right place at the right time for that one little period of time, and then you get your cheeks clapped. What
Oh, yeah.
happened to Gabe? So
Yep.
like this guy Gabe shorted QQQ at the possibly worst time ever in the fall of 2022 when it bottomed, and then he shorted JP Morgan Chase. And I think Paul went down the same rabbit hole. He thought he had this unbeatable strategy, selling naked calls and puts, because you're smarter when you're the casino. You're not buying them. You're selling the products. You didn't unlock the keys to the kingdom. Like you're fucked now because
Yeah.
now you're shorting QQQ and you're shorting Nvidia, and your bank is calling your brother. That's right, people.
Yep. Yep.
Bank is calling Paul's brother now on the margin
Mhm.
calls on his Nvidia short, and he just freely admits this in his private chats under behind everything money. Which
Yep.
is hilarious. Like, and we said he could literally stop the bleeding. He could just
Mhm.
buy the stock to just stop the bleeding at
Yeah.
this and just accept, like, or close the contract. He'd have to buy contracts anyways, but he could admit defeat. He's just going to go down with the ship, I guess he said, like an idiot. Ugh, whatever. Like I admitted defeat on BarkBox. I bought it at 9. It dropped to 7. I saw the financials were not what was supposed to happen. Management said. Now it's like 70 cents.
Yeah. And you got out before then?
When it goes the wrong way, people, you kill it. And
Yeah.
people give me shit about Cigna. I had a thesis. It went the wrong
Mhm.
way. I killed it.
Yeah.
So
I mean, didn't you exit sideways, basically?
I made like 9% on it.
Yeah. Like, who cares?
I don't know. I don't know how else to phrase. Like a lot of people talk about investing, but when push comes to shove and they're going to buy or sell, and they just don't. And it's like you told me that you were going to do this in this situation. That presents itself, and then you don't do anything.
Yeah.
Like that's what I mean by a killer. I've said to you.
Mhm.
A lot of
Oh,
people
no,
are,
I agree. Yeah.
and I don't know if you're going to perform well in the markets if you
Yeah.
like you can recognize opportunity. Cool. Can you do it?
Yeah.
Can you
No,
take? Can you make the trades? When everyone calls you a fucking idiot, like because you don't. A lot of people want to be the smartest person in the room and make money, and
yeah.
that's a problem.
Yeah.
Like you want everyone to like love you, and you're on the cutting edge of innovation, and you're the smartest man in the room, and you also crush the market. It's like okay, what how about everyone calls you a dumb shit and you make 5x on Ford? Like, would you like to do that? Like, or when
Left
we
to the
were,
bank.
I don't know, like we're getting on a tangent here. This man makes me so mad because I'm like I can't like explain enough how bad he is at investing.
Yeah.
He's really bad at this, and just because he's got a lot of money from daddy and he can pay for production, which is production's not that great actually. Like his production assistants
Yeah.
suck, but
Yeah.
people get so lured into presentation, it kills me. Like, okay, I'm a
Mhm.
bald, ugly dude. This is all the production I'm willing to. I'm not spending more. I got an LED light. Paul's got a whole stage, so you're
Yeah.
gonna believe him because he's got a studio. Like me, Kevin's got a studio. Oh, and he smiles and he's affable. Like you people fall for this shit. It kills me. Like these people are trash. Like they're trash, and you just fall for their salesmanship. Like whatever.
Oh, yeah.
I can't imagine buying Paul's course. Like
Hey, that's what I did in the
that's what
past.
we're here for today, though, because we're gonna.
Yeah.
So to give, I have 3 portfolio videos. I downloaded them in case he deletes them, which he's too dumb. He doesn't care. He's not deleted anything that I've seen.
Mm.
He doesn't understand how foolish he looks. He doesn't do portfolio reviews anymore. Nothing the last like year and a half or so because he says
Yep.
lawyers won't let him. But magically, he could do portfolio updates during the COVID lockdown period,
Yeah.
but he can't do them now because of
Nope.
lawyers.
Allegedly.
What do you think of that? Seems
Yeah.
like
Yeah.
how? So
Doesn't make sense.
did a new lawyer come on all of a sudden, or or we know the truth. He got his cheeks clapped enough and his underperformance, he knew it was coming. And he stopped talking about his stocks when he was buying Smith and Wesson, Sleep Number, all this just trash companies. So, anyways,
Gotta love it. Gotta love it.
I was gonna do a market cap weighted assessment of portfolio for people, but a lot of it's ETFs. So I'm like, okay. I thought like most of it was stocks, so I could do a market cap weighting. So we're just doing equal weighting. If he has another portfolio review that's like mostly stocks, I can market cap weight to, you know, maybe that's more of a reasonable way to assess his past performance. So not for this one. So like my cover sheet says, this video, October 2020. Okay.
Yeah.
So I'll show the photo. So this is from the video.
Oof, we're gonna have to try and bigify that. Yeah.
Is that cloudy? I have the video.
A little bit. There we go. That's relatively okay.
So the most important thing is to look at the right side. So he has here's the start. Like I said, look at all the contracts he's doing.
Oh yeah.
This man, I can't even. This man is not a value investor, people. He's a day trading clown. Like, look at this. Look at all this goddamn. He sits in his office and plays with his Dr. Dad's money. Like, who does this? All these garbage contracts. Like, so this is the stocks that he's willing to show us back then. You know, smiling. He's all jokey about it. So we've got a gold ETF, Southwest Airlines, Fox, Steelcase, Herman Miller, which is a different ticker now. So that's the old one. Ford, fucking stupid treasury thing. Treasuries, Walgreen Boots. Wow, that did so great for you in Germany. Carnival Cruises. I've already said that his thesis on Carnival Cruises clownish story investing. And Nordstrom. We could talk about Nordstrom now. They're not doing well.
Nope.
And then SPY. Okay, sure. I'm sure you have lots of SPY. So, anyways, so this is what we're dealing with. So, portfolio number 1. Should we just go into it?
I say so. I say so. What direction do you want to go with?
Okay. Portfolio number. I did 3. We're going to compare it to SPY, QQQ, and VT.
Ooh.
Got to always compare to VT for strongman. So I equal weighted it, people, as best I could to make the math work. Okay. So we're going to do 100,000 starting for all of these. So I'm doing October, which is the video date, to now 100,000. We're not rebalancing, reinvest dividends, blah, blah, blah. Okay. So equal weighted, whatever he said he had on that sheet compared to SPY for this one. Okay. Let's see how he did. He did rather poorly. Final balance. He's basically broken even, people. So at least he hasn't lost a shitload of money. I'll give him that.
Oh yeah. Let's just casually ignore that inflation has jumped up between now and then.
So he probably didn't beat inflation. I mean, 100,000 initial, final balance 107. If you now people are like, oh, he doesn't own that shit, because some of it he doesn't own in the future portfolio videos I'm going to do. Okay, again, he teaches value investing. Yeah. So to say that he sold it and got the high, he sold it at the top, but he preaches value investing, holding stocks long term. Hope he wants them to go down, he says, so he can buy more because he's long term on everything. Yeah. So to say, oh, he sold that later you can't make that freaking argument. Like, the man literally telling you he's a long-term long-term Buffett style investor is what he's parading as. What we see is a day trading clown. So this portfolio broke even, basically. Inflation has defeated him. 107 final balance, initial balance 100. So, market's done pretty well, averaging 11%, which is a little higher than normal. Given what's happened recently. So the market's doing what the market's doing, right? Yeah. So what I find funny is that, so here's the annual returns. Okay. So the first year he did okay. His investment style, 2020. Mind you, this is October 2020, just to the end of the year. It's not the whole 2020. If I did the whole year 2020, this looks even worse than this. But I mean, he got completely obliterated in 2021. Yeah. So yeah, portfolio 1. So he got wrecked. And then this is what I find hilarious. He always preaches that his system will perform well in down years,
Yes.
right? He
He
does
will.
say this.
Yeah, he says he
What did he
will lose
say?
less. Like his picks should lose less than other people's picks.
Okay, so 2020 was a bad year, right? The market was
Yeah,
down like
yeah.
20%.
Yep.
Okay. His
Mhm.
performance in 2022, worst
Base rip in the worst
index.
way. Yep.
Really worse.
Yep.
Like way worse. He 28% down, the mark 18% down here. So that was his time to shine, supposedly. That was my time to shine. Like I did way better than the market because I'm a dividend investor.
Yeah.
So I think the market was down 20%. I was down maybe like 4 or 5. So I did really well in 2022. That's why when people like, oh, 2023, you're a clown. It's like, okay, if we take the 2 years, people, I did pretty well actually.
Yeah.
So
Oh,
short term, year to date, bros. And then again, he's getting obliterated this year. There's
Mhm.
no hope or anything of this portfolio.
No.
It's just a disaster.
No, like
So
I know we've covered CCL in the past, but like I still have my own additions to that one. Good lord. Like, come on.
of course, that's how he got his
Yeah.
20% comp. I don't know how he could possibly say he got 20% compounded annually. Okay, here's for here, 2.3%.
My guess is he's like doing funny math with his puts his options selling.
Oh, he's gonna tell you that he wins on all his options trades. And
Yeah, but
he could have won. Okay, like people that did these strategies
yeah.
probably from not March, maybe May 2020 till November 2021. So a
Mhm.
little over a year. Probably worked, probably did okay.
Yeah.
That shit's done though. Like you are
Yeah.
not gonna his option plays since then. There's no way he's doing well with it. It
Yeah,
just
like
doesn't make sense. If you look at the market and the volatility and no.
yeah. Especially since the way he shorted too, like that just completely obliterates whatever it is. Like the expression is picking up pennies in front of a steamroller. Like that's textbook. Like you cannot get more real world example than what he's been doing. But no,
Just one
well,
more time for people.
yeah.
He tells you he's a value investor. The
Hmm.
man says he wraps himself in value investing, right?
Yeah.
Look at the sheet. 2 whole columns are options contracts, and only the third column is actually investing. Not
Yeah.
even stocks. It's mostly like treasuries and gold. This is not a value investor. Like, this is not a value investor. This is
No.
when he used to show us his portfolio. Okay. You don't even know
Yeah.
what he does now because
Yep.
he refuses to show anybody. Um, okay, we will go to number 2.
Oh yeah.
So it probably is not much different. This
Mhm.
is QQQ.
Yep.
So, and then I equal weighted. The only change was I kept SPY. I kept SPY in still. So it's
Hmm.
kind of changed the equal weighting.
Yeah.
Okay. About the same, give or take, which is
Yeah.
kind of interesting actually.
Mm.
SPY and QQQ from October 2020 to present, pretty
Yeah.
much the same return.
Yep.
Um, so that's kind of interesting.
Yep.
So
That
there you
was
go.
good old Paul.
So again,
Yeah.
2% return if you took what he owns in stocks and ETFs in that portfolio from October 2020 to present. His CAGR is 2%, 2.3. So
Everything money
inflation has
lost.
crushed this man. People want to say inflation beats VT. No, inflation beats this. So, oh my God.
Yeah.
They're it's portfolios. We always use to joke there's the 8 pillars, and then there's like 2 bonus pillars if you paid him more than his monthly $30. You'd unlock the full pillars or some bullshit. And then, oh my God, Eric from Investing Sucks did
Yeah.
a analysis of the 8 pillar stocks. So he got like
Oh,
a list
yeah.
of what were 8 pillar stocks. I don't know if
Mhm.
he got it or someone gave it to him. And he back tested it and it performed terribly.
Good
So
times.
because he took like, yeah, the 8 pillar approved stocks or whatever the hell. Because you could pull, I had the software for a month. You could do a search of 8 pillar companies.
Yeah, yeah, yep.
So someone must have given it to him. All right. So last one. This goes
VT.
out VT my ET. We must do it for strongman.
Yep.
So all the stocks he says plus SPY compared to 100% VT, same numbers. I'll click analyze so you don't think I messed with it.
Yep.
Again.
Oh, look at that.
Again. Still.
Another
Strongman,
one.
you still crushed his ass. So not as good as like US stocks, bro. So
Yeah. but
but still, that's a
yeah,
average market return. 8.6 per year is the average market return.
yeah.
Uh,
It certainly beat
2.3.
inflation. Like certainly, you compare the CAGRs to inflation.
Oh, I didn't show. For
Yeah,
QQQ.
Yep.
Let's look at 2022.
Yep.
So he actually did. I mean, this isn't that surprise to anyone.
Yeah.
He did
Yeah,
slightly
sure.
better,
Mhm.
slightly better than
Yes.
QQQ in 2022.
But the rebound.
But that's what he should have vastly outperformed in 2022 QQQ if what he says happens.
Yeah.
That his investing style would defend against this. He should have obliterated QQQ 2022.
Yep.
So not very much.
No.
Not even double digit. So we're going back to VT.
Yep.
And we can see the performance. His portfolio does not hold up very well.
No.
But surprisingly, it did do better than VT in 2022. So, but every other,
yeah.
So 21, 23, he got like the head start. So he was like ARK. He had like the head start, and then it started coming down, and Berkshire, just crept up. It's my favorite chart ever. The clown market Berkshire to ARK chart.
Oh yeah, it is
because like little Berkshire is just like this, and ARK's like whee, and then it goes down, and he's still just chugging along like tortoise in the hare. So again, there's your performance difference on VT versus what he had in that portfolio update in October 2020.
It's so beautiful.
Yeah, I don't know what else to tell about. So there's more here, but there's not much more. I need that video when Paul said 8 pillars outperform the market. Oh my god!
If you're able to find it, JC, good on you.
If I had a list, I don't know if I could. I don't know how many companies you could put in the back test. I don't know when you'd even start it. You could take like 8 pillars, but they changed. So you really would have to find like 8 pillar stocks from like 2 years ago, and then go forward and see how they do. But that's what Eric did in Investing Stock. I should link that video because that was a pretty good video. So he really likes Nordstrom.
Yeah.
With a grand reveal.
Okay. So this is the video of what we just talked about. So there it's in the video.
Yep.
I want to play a certain part. Let me play it. Let me get the timestamp. 22 minutes and 5 seconds. Okay. I didn't tell Bacon about that. You're going to love this part. Okay, ready?
Yep.
One of our more famous videos on AT&T. The dividend is great, but the stock has been fairly stagnant for
Well, that's a great thing about
decades.
dividends. Dividends can pay you a return while the stock does nothing. Remember, dividends are just a way of the company taking their cash and giving it back to investors. At the end of the day, if it stays in the company or goes out to investors, it's the same thing. You still own a piece of that money. The question you have to ask is, can the company do something better with the cash than giving it to me? If the answer is yes, and you can get a high rate of return, you don't want dividends.
Does that sound like what he talks about lately with dividends? I bet you didn't think he would say that, did you?
I did not. No, and especially in that case. Like,
are you fucking? So he's made how many videos lately has he made bashing dividend investors and bashing dividends to death? In the last like year or so. But we go back in the Wayback Machine to 2020, and here he fucking is praising dividends now. Like, this man is such a two-faced piece of trash. Like, so you like, would you see the algorithm didn't like dividends and now you're going to bash them? Like, because he loved him in 2020, apparently he had no problem with them.
It's just such a weird example though, because like AT&T specifically, 2020 AT&T, like they still had a lot of debt. Like you could argue like AT&T, no, just screw the dividend, like pay down that.
Oh wait,
debt.
who's here?
Oh, someone's here.
Fabio. Well.
Where are you
How's my
driving
audio?
from?
Fabio, are you driving a car that should be recalled?
Yes.
I watch Dan's live streams.
I
was late to that one, Dan.
Keep your wheels on, your hands on the wheels.
Yes, I did see that. I'm a brave man risking my life. Should be rewarded for this.
Now. I'm sure the update they're gonna watch you inside. Make sure you're not distracted.
No, I'm just live streaming.
They're gonna page you. They're gonna shut the car down all of a sudden with the new software updates.
Not if I pay more money. Not if I pay more money. If I put my credit card into the point of sale system that's in front of me, I should be okay. I should be able to unlock the driving feature.
He's gonna hack his car. Bobby's like, I know a guy. Yep. Down in Miami, he just jumps it.
Yeah.
I felt happy to see this live stream. Finally.
I'm happy that it's part 1 of 3. To be honest.
Yes.
I haven't even looked at the other 2. I'm gonna save my excitement. I know some of it because you've clipped out some of it for your like the intro you did. So, but
yeah, he's probably the dumbest guy on YouTube that thinks he's smart. So there's a couple, we all know the names like Jeremy and company, but this guy, oh my God, I don't know, he takes the cake. He takes the cake.
When you go back to 2020, like he says totally different shit from what he does now. Like it's literally not the same person. Like every time I watch a video from him back then when I do research, I'm like, wow, he literally says the opposite of that now. Like, how do you change that much in a 2-year period?
What did he say in 2020?
Well, we played a clip. So he liked dividends in this portfolio review video. Like he said they were fine all of a sudden. Where now, last like 6 months, he's like, oh, they're terrible.
Yeah, he referenced around 2020 that AT&T, like even though the stock price was flat at the time, that Seth brought up, Paul's like, yeah, but like the dividend, is being returned to you. So yes, stock price is flat, but whether you get the shareholder return from dividend or they retain the cash and stock price go up that way, I'm okay with it. Like,
so
good old Paul.
When you posted your YouTube post about Paul today, somebody wrote, "Are you saying he's wrong about the market? He may have made a stupid short position, but I don't think he's wrong about the market." My God.
Oh my God. Why?
It hurts my brain. Like,
yeah. I even gave him a short response.
Why do people feel like they have to always say? Is it because they want to sound intelligent? Because the market's overvalued.
I think so. Like speaking as a guy with a value bias, like when it comes to macro, I try and keep my opinions like by and large to myself, and try and keep those opinions as separate to me, like trying to analyze a company specifically, or maybe an industry or sector. Like I try and limit that stuff, be as neutral to that as possible. Maybe I'm wrong. I know I can easily get blindsided and blasted by macro one way or the other, but like that's the risk taking that I know is like, that can easily rip my face off. But
wait, did you see that? I love that tweet response. I think the market's going to crash. I hope it does.
Oh my God. I hope so.
Yeah, I hope so. He means that literally. As a dumbass.
Yeah, bro. I loved losing half my money in the .com. I loved it, man. I hope it happens again.
Yeah.
Give me blood. Like,
well, he's so silly because he will lose money if stocks go up and stocks go down. This is actually funny. This is actually pathetic. Like he's actually a pathetic.
He lost to SPY and QQQ in 2022. They both wrecked him. Like,
but I just want to say though, for the record, by the way, if you're like a new investor and then you lose money in a bull market and you lose money in a bear market, I'm not going to make fun of you. But if you're arrogant about it, I'm going to make fun of you. Okay. I'm going to make fun of you a lot. And in the case of Paul, like he's pathetic. He's absolutely pathetic.
And you're going to charge, relatively meaningful amounts of money, I'd say.
Okay, I love this guy. So under the that Paul post.
I hope so.
Correction will come soon. I hope so. This dude, I know I've talked to him briefly before. Bolton James. I want to read. People who believe Paul's nonsense pay him to spit BS or real tools. He's a Jim Cramer of YouTube. He has a BS track record. He has zero professional experience in the stock market. He's grifting like all the rest of YouTubers. He's con artists. And he keeps going. I mean, what kind of loser acts like a saint, promotes value investing, then short stocks, sells day trading to newbies, or the fact that or he decides company fair value from an Excel sheet, or applying value investing principles to tech companies. He's a clueless grifter.
That is beautiful. Just not like blow up the microphone. Just
that's another, like he applies his tool to every company with no recognition. There are companies you probably shouldn't value.
Oh yeah,
with that tool that I don't even want to call it DCF or whatever, but
like
Well-
go ahead.
I was going to say the design of his DCF is basically the same design that you would do in your very first finance class.
Yeah, it's the flaws are legion. Like I'm glad that we've been able to cover them behind the scenes. But like for me, the other thing is like he always loves his like little catchphrases and proverbs that he like regurgitates, but I don't think he studies them. Like one of the ones that like he loves to use is, in the short term, markets are a voting machine, and in the long term, the markets are a weighing machine. But like he doesn't seem to process that and think to himself like, what does that mean? Like okay, if the market is a weighing machine longer term, how does a weighing machine work? Do the mechanisms change over time? I think they do. Like maybe if you're open-minded to that, like things get better. But no.
The moron thinks that the market should fall 80+%.
12, 14, 16.
So Fabio, do you want to comment on his Schiller PE ratio that he commented on in the post?
Yeah, it's a completely outdated measure to measure fair value of the S&P 500. So let's refer to his commentary on the Buffett indicator, right? It doesn't accurately measure the reality of the current United States stock market, where a good portion of the earnings generated by American businesses are done internationally.
Yeah.
So,
did we lose Fabio?
I think he went under a bridge.
Yeah. Fabio, I think we might have lost your audio. And possibly the video.
Oh, he's under a bridge, I think.
Yeah.
So,
Yep.
let me read the.
Yeah.
So I have an article here. So this guy talked about why the Schiller ratio needs to be trashed. So the Schiller price earnings ratio. Okay, I was talking about.
Yep.
It's a flawed metric. So this is a chief investment strategist for a Deutsche Asset Management. When it comes to something like the Schiller PE that deserves to be trashed, we really have to move on to not even talk about it anymore.
Yes.
Yeah, the economist said useful principle. Okay.
Yep.
Why do they do that? They always cut in some paragraph that's useless. So he reiterated, the person that they talked to, in the context of forecast, the stock returns would be lower for the rest of the cycle given the market stretch valuation, because the Schiller ratio is based on 10-year time frames. So it doesn't account for weird, things that happen like 2008, let's say. The CAPE ratio accounts for inflation and adjusted in earnings adjustments. However, the earnings should always rise more than inflation rate because companies don't pay out 100% of their earnings. The share of profit that companies don't pay out as dividends and keeping reinvested or debt repayment, retained earnings aren't accounted for in the Schiller PE ratio. So you're not giving a full. It's just like, I've heard of the Schiller PE ratio. I probably in the past looked up what it was and then I just threw it in the garbage.
Same here.
That's what I assume I did at some point. Oh, he's back.
Oh, okay.
Yeah,
we got audio.
I received a call, and then when you receive a call, I guess the web-based version of StreamYard just freaks out and doesn't know what to do after that. But
did you see that comment?
Dan replaced
Fabio with an article.
Cold-hearted. Slow to lethargy.
I did kind of actually.
Hey, you got to do what you got to do. Was it an article talking about the problems with the Schiller's P ratio?
Yeah.
What it was. What did the article say? because I couldn't hear anything.
Oh, give the highlights.
Doesn't account for retained earnings and how retained earnings growth has really mattered over recent periods, as opposed to the entire time frame of the Schiller PE's existence. Dan mentioned also how the nature of larger companies in the U.S. that fall in the S&P 500 have drastically changed their revenue streams,
Yep.
to be more overseas. So
Yes.
that
Yeah, a really good and more accurate of measure of the Buffett indicator today would be to take the proportion of global GDP, take like a percentage, a weighted percentage, and then apply that to your formula. Good luck with that. That'll be a nightmare. But that would be kind of like a better apples to apples comparison. So Paul, for claiming to like math, probably failed algebra. I'm not gonna lie.
Oh, come on! You're like, are you shouting out the video where he failed with his bond valuation video, where he came up?
Oh
with
shit! I forgot about that. Yeah,
you can't forget about
got
that
that
one.
wrong too.
Finance 101, right there.
Yeah, where apparently if you buy like T-bills and rates go down, you'll make like crazy percentage, like a crazy percent. He's like, yeah, man, if rates go from of 2 to 4%, you get cut in half. If they go from 4 to 2%, you double your money. It's like, oh my, wow, Paul.
Yep.
Wow.
For the man who self-proclaims himself LeBron James of investing, that's an example of like uncontested layup. No one is around you. You're the only person in the gym, and you blow it. Like it's like a running back where no one else is on the field, and you have the ball. You're
Oh my God,
yard away.
people! Here's the Schiller ratio from
Oh, yeah.
back to 1871, Reconstruction. Oh my God.
Oh my God.
Oh my God. There's periods where it went crazy up. Look at that. Wow. This is killing me. This is so funny.
Yeah. Hey,
Why do people bother? Why do people bother with this? I don't.
Just PE to macro, bro. Like, and you're a value investor.
You buy index funds and you don't think about it a second. You just buy them. And then if you want to buy individual stocks, now you can value the individual company and what they're doing. I don't understand why people fucking worry about this stuff other than to sound intelligent when you talk about stocks, because you don't really know what you're talking about. So you just talk about Schiller ratios because you can't come up with a thesis like a Disney thesis or something else like you like. So you just talk like this. Ooh.
Dan, this is the last point I'll say because then I have to go. But Paul is like Buffett, except he's not like Buffett. So Buffett, what he does when he recommends, because they both recommend people to buy the S&P. If you see his tweet, Paul goes like, yeah, you should buy the S&P, blah, blah, blah. And if you want tech, you go QQQ, which QQQ isn't only tech, but we'll it's just QQQ is just the NASDAQ 100. It's just not necessarily tech. But there's a big difference between Buffett and Paul when they recommend that. Buffett actually outperforms the market. Paul would do much better by following his own advice. He strangely refuses to follow his own advice and then goes at him himself. And to my understanding, or to what we view, again, he's as transparent as was a good comparison. I mean, he's not, let's just say he's not very transparent. We all know that. Yeah. But from what we do know, he's definitely lost money in a bull market, which is a skill. He's lost money in a bear market when he claimed that he would. So I don't know what market he's going to succeed in, because 2023 has been a great market. Everyone has crazy year-to-date returns. And this dumbass can't do it. But that's where I bid my adieu, gentlemen. Thank you for having me.
See you later, buddy.
Bye, Fabio.
I'll be in the audience, but see ya.
Yeah. So
this man,
like we said before, it's just like the only thing that looking at things like this Schiller P ratio or looking at market valuations to say, oh, is the market overvalued, undervalued? Now you're going to question. I see it on Reddit. So where does this lead retail investors? They start to ask questions like, I have money to invest, but the market's overvalued because I heard this dude talk about a Buffett or a Schiller ratio thing. So should I just wait on the sidelines for X thing to happen and then I'll put my money in, right? They don't really know what that X is. They're just assuming they'll wait till a better price comes about, but everything you've ever read about investing in broadly diversified indexes says you put it all in right away. You don't even need to DCA, actually, from what I've seen. The best results are actually, you can DCA if it creates a habit. It's not that big a difference in performance, but just throwing the money in January 1st every year
compounding
outperforms.
periods.
More time in the market. So worrying about like ratios like this and listening to this fucking idiot who does this stuff, like it's just going to lead you to just being scared and not putting your money in the market, thinking you can time a better price. I could show another chart where like Charles Schwab did like a hypothetical, like 5,000 a year, the worst market timer versus someone in cash. The worst market timer still destroyed the guy that was in cash the whole time. And it's a shame you have people doing this garbage that doesn't help anybody. It doesn't help anybody. That's why I never will value an ETF. I think someone once asked me to value. I'll never value an ETF in my ETF reviews. I'll just tell you I like their methodology or I don't.
Yeah.
Like the idea that you're going to value broadly diversified indexes, just fucking buy them. Like, don't worry about it. Like, there's nothing proving that your timing is going to work. There's no studies say that'll work at all.
I like
just buy it.
the
Lump
like
sum, DCA, it doesn't matter. And you
Yeah,
never
core-
look at it again.
core satellite, like if you really want to go that way or not. Like,
And I'll tell people in 2022, my wife's 401k basically was flat, even though she put thousands of dollars into her 401k. And she ended the year, I think, about the same as she started. But that's how it works, people. That's how it fucking works. I don't sit here and go, oh, I wish I'd put it all in treasuries at the beginning of the year and then I would have had 20% more money. That's not how this works.
No.
This leads you to do what Meet Kevin did, where he got blasted when he tried to market time back in the end of 2021 to 22. Then might go check that video out if you want. But he tried to market time the movements of the market and he got wrecked on it. So this is all pointless. If you want to worry about in timing individual stocks, yeah, totally.
No,
Like,
yeah.
Disney was uninvestable all summer. I watched it until what happened, which I think was end of October when I got in it. So individual stocks, yeah, you got to value it and time it right. Indexes, no. Like, so last thing so it's just funny on Nordstrom.
Oh, yeah.
Nordstrom's a disaster. And he spent like half of this.
But dividends make people feel warm.
Talking about Nordstrom because he was so excited about the prospects of this stupid company. I think this was this part.
And we're going to call that next then. And by the way, it's consistent time. They have if you take all their cash, PE ratio,
10-year-old
Geo does
son.
not qualify either. Sorry.
I don't
and
know.
it's going to allow us.
He spends a big chunk of this video talking about Nordstrom, talking about how undervalued it is. I'm like, department stores. You're going to invest in department stores in the age of the internet.
Yes.
They're like the one thing I know I would never want to invest in is at a department store because those are like the things doing the worst. Specialty retailers can do okay in this age of Amazon and the internet. But like, are you kidding me? Macy's has done so terrible that market cap is garbage now. A private equity firm wants to buy it. Like, let's be real. And he has fucking Nordstrom. Shares tumble, sales drop, record thefts. They don't do well. These are not good businesses in this modern day. Like, they were good 50 years ago. So it's like, oh my God. Anyways, like, it's just funny. Like, totally, like, why even waste your time looking at something like this? This is one area where I agree with like growth investors, where it's like, yeah, you should spend your time on things that can do outsized returns individual stock wise. To me, like, wasting your time investing in individual stocks like this it's so trivial. Like, you're trying to hit grand slams with individual stocks, right? And then you're just trying to hit singles and doubles with your indexes. Like, this fucking guy, so dumb. But so this will be more after the three portfolios. I'm going to read from the book of Paul.
Oh no.
I have all these articles downloaded, so I don't care.
Oh no.
So do people know this? He was an author. people have to know this. He was an author on Seeking Alpha.
Yeah.
You love that? I don't think he can delete these. I don't think he can. I think that's why they're still up there, because I think, I don't know, maybe he can't delete them, or he's too stupid to know he should probably delete these. Like, okay, 2015, the state of the market. You're gonna love this. What do you think he said about the market in 2015? Oh,
It's
look,
overvalued.
I can't tell. Here's living proof, people. He is a perma bear. Literally, you were looking at a perma bear. He is saying the same. I mean, we could look at this. This article almost matches what he just did in that Twitter post today. It's the same shit. 2015. Market's 100% crazy stupid. Long-term reliable metrics, the stock market to GDP ratio, which Buffett. Oh, so he's bringing up the Buffett indicator in this one, not the Schiller. Again, he's doing these market to GDP ratios to say that the market's overvalued. So here we go. 8 years ago, he did the same crap that he's doing today, people. How's the market done since 2015?
Yeah.
Pretty good. Say pretty good.
Yep.
So here it is again. He's market's overvalued. Market's overvalued. I have articles 2012. He's saying Amazon's overvalued. Everything's always overvalued with Paul. And if you believe him, you're just going to lose sitting on the sidelines, buying these value trash companies that he puts money in, or his day trading. But swear to God, he says the same. This article, he could say this yesterday. It's the same garbage he's been touting for a long time now. So I just want to get that across to people. Again, historically, the average stock market GDP ratio has been 90% range. So he's taking one of these metrics to explain why he's so smart compared to you, that the market's overvalued. So, oh, look, 10-year cyclically adjusted ratio. So I'm sure he's talking about the Schiller ratio, because it has 10-year cycles. This is crazy. Many decades ago, ooh, the Bible of value investing. Oh, the market's overvalued. Oh, 2015, I'm so smart. Oh, here it is, the Schiller. So again, he loves this goddamn Schiller. Look at it. Look at it. I drew a line on the chart, and it says it's higher than the red line here. So obviously the market's overvalued. Oh my God. I wonder if I can post this on my YouTube, because I have the PDF of it. I swear to God. And then he gets into Amazon. Well, that'll be a separate. His article hatred of Amazon will be another video, because there's extensive writing by him and commenting about how much he thought Amazon was overvalued from like 2012 to 2016. Like, it'll take me an hour. I'm not going to read all of it, but spoiler alert, he wasn't right. He said they were, he liked Walmart over them, which Walmart did well, but not Amazon. So look, people, like he literally just he's been spouting this bullshit about the market being overvalued. Like, go look at the date of this article, 2015. Okay, he literally said the same thing in this post that he was it yesterday. It's the same garbage like that he's touting for 8 years. So if you listen to him, like let's see how SPY's done since 2015. If you were too scared to get in because you believe that it was overvalued, like Paul told you.
I love that he wrote that in 2015, and Amazon Web Services started what, like 06?
So here, SPY. That's what the hell is SP? Okay.
Discontinued, maybe.
Let's go to middle of 2015. So we'll give him middle. June of 20. SPY was 207. So it's over doubled. So people look at this. Since he wrote that Perma Bear article saying the market's overvalued because of Schiller and Buffett metrics in 2015. Actually, what date did he? Let me find. Okay,
15.
November 12th, 2015. Okay, let's go to November 12th, 2015. Okay, November 16th, $209 SPY. It's 270 today. So he was geometrically wrong. Like, he's so fucking wrong. It's like, and if anyone listened to him, you would have been wrecked financially, because you probably would have bought gold ETFs and treasuries like you saw.
Yep.
Go look at
shorted Amazon.
Look at what he's got: gold, treasuries, fucking some sort of short-term maturity cash asset. Department stores.
Yep.
Or you could have had like a broad index, or even a div. I mean, people bashed it. I've done pretty well. Like
Yeah.
a lot of my like Lockheed Martin and McDonald's have outperformed the market. So
Yeah, the cost bases that you've gotten on those, like, good
I just
lord.
like you can't lump all people. You can't lump like dividend investors together and growth investors into one pie. Like
No. There's
it's kind of
different
foolish.
types. Yeah.
But anyways, let's not get on a tangent.
Yeah, because there are growth investors that like think when things are over expensive, like over exuberant, like
The thing that
they're
how
out
I
there.
think growth investors can win, if you think
Yeah.
you're going to create an entire portfolio of growth stocks and they all do well,
Mhm.
I don't think that's the way to go. If you're going to be a growth investor, you're going to try and look for that like grand slam of grand slams, one or
Yeah.
two stocks,
Yep.
and everything else can be either break even or shit.
Hmm.
So taking point, Tesla, right? You could have
Yeah.
picked 40 companies and half of them break even, maybe 10 of them go to shit,
Mhm.
five do well, and then there's like one that's like life changing.
Yeah.
That's growth investing that I've seen.
Yep.
So just think you're going to pick 40 stocks and they're all going to do well. I don't know
Yeah.
if retail people have the fortitude to do that, like because you're going to see a lot of red.
Oh
Uh,
yeah.
And that's what made Peter Lynch successful. He bought because he would even write in his books, which so many people get Peter Lynch wrong.
Mhm.
He's like, all I can lose is 100% of the money.
Yeah.
But if it's a good investment, I can make 15, 20x on it.
Mhm.
So how about I buy like hundreds
Yeah.
of speculative small cap tiny companies that I do the
Mhm.
footwork for. And again, like if 115x's and 3 go bankrupt, I've done well. Like that was
Yeah.
what he did. So and
Yeah.
he was like he did the footwork on these investments. He was out in the field looking at these companies and maybe a type of investing that's like kind of lost now with the internet. Um so
There's actually a company that like kind of does that in a different way. For those that are entrepreneurial, company called Y Combinator. Like basically their value prop is that they help like small businesses or startups, and they'll be very very selective in who they invest in. But like they do that approach where it's like almost borderline like shotgun spread, and they know like a fair amount are going to go bust, but like the unicorns where they have that small percentage ownership in,
mhm.
they're gonna coffee can that pretty much. So yeah, like I've thought about it. I have thought about it. Like, and it like there's also that value approach towards that as well. Like there's it can, if you know what you're getting yourself into and are
Who
prepared.
are you trying to get me to talk to, Fuhat? You got
Uh-oh.
to reach out to Seth. Oh, I don't. I would
That'd
fucking
be
reach
tough.
out. If I can find him, I will reach
Yeah.
out to him.
Like in theory, maybe that NDA is done, but
I'm very persuasive.
yeah.
So I have some professionals I've reached out to on Seeking Alpha for some ideas. So I don't know. I've gotten responses from everyone I've talked to so far, which is pretty impressive. But I have to find the right. I don't just want to bring on someone to just talk. Like it'd be like something specific, like the guy I brought on, like a specific targeted topic. One of those professional guys from Seeking Alpha. I call them professionals if you make a living from investing, I'll call you a professional. Okay. If you're selling courses and YouTube ad revenue, it's not professional. But if you work in the industry, then so be it. You're a professional.
Yeah.
Um, anyways, so that's him. I gotta love it. You gotta love it. Like he's so smug. It's just so smug. I can't take it. It pisses me off as someone who built all I got was health insurance for my parents in college. Like my dad wasn't a freaking doctor that gave me
Yeah.
millions of dollars. It just
Yeah.
pisses me off that he's so. And I'm not saying like I don't hate rich people. Like good for you. You
Yeah.
got ahead in life. I'm happy
Mhm.
for you. I'm
Yeah.
happy for people that have good situations in life. But don't be an arrogant prick about it.
Oh yeah.
And he's so arrogant. Like
Could have
I
done
know
anything.
he thinks he's better than you
Oh
because
yeah. Yeah.
he grew up rich and
Mhm.
I can't take people like that.
Yeah, like MySpace Tom, like the founder of MySpace. Like he's last I checked, like the guy's just like happily posting his photography up on Instagram.
Yeah.
Like to my knowledge, he hasn't really done anyone else any serious harm. Like
Paul's the guy that'll think he's the smartest guy in every room he's in, and then he'll tell you he's the smartest guy. Whereas like you can be in a room where you're the smartest person, you think. You don't have to tell everyone.
Yeah.
You literally could just keep it to yourself, and you could just kind of play like play your cards better in life. Like just this is not how you socialize. And
No. I mean, like
I feel like
the-
everyone he socializes with is on the payroll, most likely.
probably, yeah, because
Yeah.
like
Well, look, he had one friend and he fired him, didn't he?
yeah,
Supposedly
Seth,
Seth was his friend.
yeah.
Mo's another silver spoon doctor's kid. So they're the same people that don't know. Like
Yeah.
they're both entitled pricks. So
I just think that like thinking you're the smartest in any room or any zip code or wherever you're at, like is a dangerous setup. Like if you think you're the smartest, how are you gonna like I like the proverb of if you can't identify the sucker at the poker table, you're the sucker. And if you think that you're the strongest or the smartest, like come on, that's just a dangerous setup in life. Like good God.
well, I just love the perma bearness. Oh, this is gonna be so much fun to do the articles. I've read a few of them. His Amazon articles are so because now we know the truth, right? I love it now. Like, I like responding when we actually know a bit, right?
Yeah.
We know a bit like what happened. Like,
Oh yeah.
so we know how the story goes because he wrote these articles bashing Amazon 10 years ago. I can't wait. So
To
that'll
me,
be fun.
it's just baffling though. Like, because around that time, that 2015, like he still compares Amazon to Walmart and Target, but
Mhm.
AWS like was like just either like in the middle of the rev up or like it was revving up like right then and there. That's such a bad, horrible, stupid comparison
And
just from like revenue streams.
that was one of
Ah,
the lessons of Peter Lynch is like stay in your areas of competency.
yeah,
Paul thinks he can make every investment. And that's his biggest blunder that I've seen is that
yeah,
he thinks he can apply his value investing to tech companies
yep,
like fabs and stuff like that. And it's like you're so wrong. You're so
yeah,
wrong. There are limits to every style of evaluating company.
mhm,
I like how I looked at something like Cigna is not what I would look at for a different investment like Disney.
yeah,
Um, or something more speculative like a freaking drone company with $100 million market cap.
yeah,
There's different processes.
hmm,
Um, so if he's not that flexible, then just stay in your lane. That's why
yeah,
if you're not willing to be that flexible, there are companies that you could do his DCF model and it would probably be not bad.
yeah, as a
Boring,
screener, yeah,
large companies that have very prescribed, revenue streams that you
mhm,
can probably do linear projections forward and be unless something bad happens,
yeah,
you'll be fine. Coca-Cola, Procter and
mhm,
Gamble,
yeah,
stuff that doesn't have big volatility.
yeah, yeah.
But are
Business
you
model.
making alpha? You're not making alpha in the market doing that. Just buy fucking SPY instead. It's so pointless to buy those. Like, I don't know. Like, if someone's like, "What about Coke or Pepsi?" It's like you could just buy uh,
Buy them
index.
both
I
in an
have
ETF.
Pepsi now, but I'll
Yeah,
probably not keep it forever.
yeah,
So,
yeah.
anyways,
Proper big boy ETF. Like,
wow, 24. Look at that. Let's get to 100. No, just not kidding. Well, I am this close to having super chats. So I
oh
should have
really?
super chat access next week.
Hey,
So you can send me money. I won't take my shirt off. First, right out the way. I am not.
yeah. I'm keeping my shirt
You
on. No
cannot
one
pay me
wants
to
or
do
needs.
whatever you want. So I'm not strong, man. I should start being like I'll do video reviews for I'm a discounted strong man. So if he's 50, I'll be like $43. Oh no. Oh,
Good
dude,
times.
freaking I have female viewers. My metrics show, which I was kind of surprised.
Hey,
Yeah, I
oh,
don't know.
that's good. That's good.
Maybe they're looking for sugar daddies.
I wouldn't go that far. I mean, just
What are you saying? God damn it.
no. I'm just saying maybe
I'm not-
they like sensible and reasonable content, and that's what the value you provide.
You're right.
Yeah,
They're probably just like laughing.
it's the
So
beard.
the beard. I grow a crappy beard. This is all you get.
Oh,
So
I grow a neck beard, so it's even more depressing.
do
But
it. Do it,
no,
bacon.
no,
I
no.
want to see it.
Good God, no.
So
But yeah, like I do have a thing on CCL if we wanted to talk about it, but we don't have to. That
Oh
that
wait,
that
okay.
guy.
We're at an
That,
hour. We'll
oh
wrap up soon.
yeah, yeah. I sent it in the private chat
What
if
are
we
we
wanted to.
looking at? Hold
It's
on.
a price comparison chart, like because that was 2020. Yeah, yeah. Like such a great picker in the space. You picked
I
the
almost
underperformer.
bought I almost bought Royal Caribbean last year for $35 and I let people talk me out of it.
Yeah, yeah.
I
Same here.
looked at it and I'm like,
Same
Royal
here.
Caribbean is the best of these and I knew it. I'm like, Royal Caribbean's the best in breed of these companies.
Same
But
here.
then right when I was like tempted to buy it, there was the news article about their debt becoming junk bond status, like junk rated.
Hmm.
It scared me. And I'm like, I should have stuck to my guns because Royal Caribbean's a better company than the other two.
Yeah.
Like it's a better experience. I've been on two of these. I've been a Royal and
Hmm.
Norwegian, but I knew like Carnival, for like Carnival can't control their prices because they can't charge as much. Royal Caribbean is a better product.
Yeah.
So in the end, Royal Caribbean can raise their prices more than Carnival
Hmm.
because Carnival's like the budget, friendly version of a cruise ship.
Yep.
So
Yep. So that's
120?
yeah. Yeah, I know, right? I know, right? I screwed that one up too.
Right here. I was looking
Yep.
at it right here last summer,
Same
and I
here.
was like, "Man, I should
Same
buy it."
here.
I'm like,
Yep.
it's so cheap."
Then one of the buddies said, "Yeah, I went on a cruise, interviewed people, and they're like, yeah, no customer loyalty." So I'm a little unsure. I'm like, yeah, good point.
But here's
Yeah.
one we talk about, like, a thesis, right?
Yeah.
We've talked about cybersecurity recently.
Hmm.
So, if your thesis is the cruisers are gonna cruise is your thesis, right?
Yep.
This will rebound because people live this lifestyle of cruising and they don't do other vacations, so they're not gonna switch to hotel resorts or something. If
Yeah.
that's
Yeah.
your thesis, you
Yep.
would say, "Okay, buy all the cruise lines."
Yeah. Yeah.
Right? And you'd do pretty well because here's the
Hmm.
one that did really well and then the 2 that did kinda crap. So
Yeah.
you'd have a good return in between.
Oh yeah.
But
Yeah.
or you pick a winner, and in this case, you had a 1 out of 3 chance of doing right. 2
Hmm.
out of th you had a 2 out of 3 chance of doing terrible. So
Yeah.
this is the cards you're playing. Um, but I think a lot of times people think they have an individual stock thesis, but it's actually more of a sector thesis, and you
Yeah.
just haven't realized it because you're looking
Mhm.
at one of these companies.
Yeah.
Um, and that's what I realized was like cybersecurity. I don't have an individual company thesis. So,
Yeah.
anyways,
Speaking of theses, energy, energy. Uh, I could be wrong, but I think that it's interesting for maybe okay to limp in for calculated risk, and maybe the price goes down even more, and it's a better calculated risk.
hmm,
But yeah, because I know
interesting.
that it got mentioned like in the past.
Honestly, I'm still thinking about buying ExxonMobil.
Yeah, I
I'm
initiated a
really,
watcher there. Full
I'm
disclosure.
really, I'm really thinking about it.
Yeah, it's
I,
it's
I
on my
liked what I
radar.
heard on the call.
Yep.
Um, Listen, people, I'm a 40-year-old boring old guy that's trying to retire like in a very short like so like I'm trying to like I'm just thinking I'm like I like what I heard from them and um
Yup.
they're the ones people oh it's going to be green energy is going to screw them. I'm like they have the assets to
Mhm.
affect a green future.
Yes.
They have the cash flow.
Yes.
So, if they can pivot, that's can management pivot at the right time? I don't want them to go all in on
No.
green. No, they need to
Over
set
time.
themselves up so they have the framework to go green, and then they
Yep.
can turn that switch in the future, which is
Mhm.
what I get the vibe from Exxon.
Yes.
I like what I hear from Exxon more than Chevron.
Mhm.
Um, I don't own I used to own Chevron for a little while, but I don't own
Yep.
it now. So I
Yep.
don't know. I'm really thinking about I like Exxon
Mhm.
under 100, but I'm
The,
thinking
the I'm not
hopefully.
saying that it's necessarily there or not. That's why it's just a watcher for me. But
Yeah.
we did mention it in the past, and based off of price movement, I think like because when I mentioned this to other people, no one yelled at me and said I was dumb or stupid. Like
Mhm.
yeah, because otherwise you would have said so like right to my face. It would have made for great content.
I'm not there yet, though. I don't
No, it's
know.
all good. It's all good. It's all good.
I'm not there
Like
yet.
yeah, because like me doing a watcher, like who cares? Like the thing could go to zero, and I'd be a little grumpy, but whatever. Like
There's room to grow the dividend.
dividend, yeah.
I don't particularly want to add a lot of individual dividend stocks at this point.
Yeah.
It's got to be really, I don't know. I had 40. Now I'm down to probably like 15 now that Cigna's gone. So
Mhm.
I'm looking more to cut than add, honestly, and then just contribute into a broad the wisdom tree one that's like all the dividend stocks. But,
Ooh, very nice.
oh, anyways, at an
Yep.
hour,
Yep.
20
Thanks.
viewers.
Yeah. Thanks
Appreciate
for
it.
having
So
me on.
I don't know what's next. Maybe the Pfizer one. And then I'm gonna do, what did I say? I forgot. Oh, the book review.
Oh yeah,
Oh,
book review.
SCHD and SCHD. I'm gonna do it finally.
Oh, okay. Ooh.
People keep asking me.
Yeah.
So I might do them as together because I honestly view them as the same. I don't think I don't see why you'd buy one or the other. If you're gonna buy them, I would buy them together, which is what I do. I buy them together. So I should do a video together to say it's just a proxy for the US market.
Yeah.
I think there's a decent chance it'll outperform SPY. Not by a lot. People, oh, you're saying 20. No, I'm saying like slightly better, like 1 or 2% better.
Yeah.
But people get out crazy with this stuff.
Yeah.
Anyways, I like to have different types of investing. I'm not the one, I wouldn't buy VT across, like I couldn't do it. I like to have slightly different takes on things.
Yeah. Your core satellite, like overall.
Yeah.
Or that's the direction you're headed towards.
Keep
so
yourself
far.
engaged, bro. That's all
Yeah.
that.
Yep.
Because dividends, bro. Can you imagine if you had $1,000 a month in dividends? Somebody might. I'm just saying.
Yeah.
You'd probably not hate and make fun of them if you had $1,000 extra money that grew.
Oh yeah.
At,
Yeah.
I don't know, like 6 to 8% on average.
Yeah.
So
Oh yeah. Mailbox money is very, very powerful. Like when it comes to like mailbox, like from the company to your mailbox. Metaphorically speaking.
I used to get checks actually back in the day.
Yep.
They would send you a check.
Mm-hmm.
That was fun. I remember getting those. I would wait for it in the mail. Like, is it here yet? It would always take like weeks longer than I thought it would. So, because it came from the brokerage.
Yeah.
So, whatever. So that's the video. I don't have anything else. So, hour.
Yep.
Thanks for listening.
Oh yeah. Thanks for having me on.
Thanks, Bacon. Should, I don't know. I was gonna say I should name these, but no. Because I learned don't call them live streams because then people will not watch them later on, even if there's relevant information in them. So
yeah.
I don't call them live streams anymore.
Yep.
So
It's perfectly good.
thank you, and we will see you later. All right.